Good day. It is Thursday, January 15th, 2026. Zach Howard back with a market update for a week now. We haven't been here, but back again. Happy to be here and present the update of where we're to at the Dragonfly Capital fictional portfolio, bullish, bearish trends in macro asset classes, and then a presentation on some macro global. In the slides, we got bullish trends in U.S. equity indexes across the board. The small cap index is outperforming NASDAQ and the S&P 500. Those higher beta indexes in the Russell outperforming them. Fix still very subdued. Bearish trend. Standouts in the notebook here. Bullish trend in the U.S. dollar off the back of a much weaker Japanese yen and weaker euro. Trend change in the euro, resulting in that trend change in the US dollar. Oil bounced around from headline to headline from Donald Trump and Iran. Bullish to bearish. I think it wants to break to bullish to join its other commodity brothers and sisters in this commodities bull market. Natural gas, though, still sucking wind here in a bearish trend. However, potential setting up for some winter weather in the U.S. and it's a massive exaggeration in bearish positioning in the CFTC futures markets with the natural gas weekly Z-score on the 1 year, 2.13 negative, 168,000 contracts bearish short positioning versus a 3-year average maximum, 182,000 contracts. What does that mean? Everyone's positioned at bearish natural gas here. Like I say, without natural gas and oil, the rest of the commodity structure is all significantly signaling higher highs, higher lows in those bullish trends, particularly silver and copper leading the way. Number one, silver just continues to defy gravity with these all-time highs. Potentially getting to $100 an ounce here in this week. It's crazy. A physical demand out of China, out of the Eastern world. Copper coming on strong too. I think copper does this silver within 18, 24 months. We're going to see major repricing in the copper market. It's just unbelievable if you look at the theses around copper. However, as I'm going to talk about in the slides, flows trump the fundamentals in the short term. We do also have a standout in Bitcoin. Turning bullish trend here, something to keep an eye on. We got Bitcoin and gold now positively correlated with a bullish US dollar. Something you don't see it often in risk on markets. We got, look at this, volatility is still subdued in the NASDAQ, in the Russell. Gold volatility, treasury volatility continues to melt away. And even the high yield space, no signs of distress there. Checking in the portfolio, we're up 9.7, 9.8% since we launched this fictional portfolio back in November. And the heavy lifting being done by the metals and mining ETF, up big time here, 32%, 38%, 32%, but the copper miner here, Ivanhoe, number one in the positioning sizing. Mako making all-time highs as well. So this bucket of the portfolio up big time, 21%, despite two natural gas names in drawdown mode, waiting for them to catch up. But bottom line is there's so much alpha to be had, I think, in 2026 in the metals and mining. No analysts are covering it. Those analysts got fired years ago. All analysts focused on AI, semiconductors, tech. No one's really paid attention to this commodities bull run yet, I don't think. And I think there's lots of opportunity ahead still. That's what we're looking at from the portfolio standpoint. Onto the slides, a couple interesting scenarios here. Looking at how capital continues to leave the U.S. and those mega cap names slowly, but then all at once. The black hole that is global capital is that S&P 500, those 7 mega names. I love this chart here. I picked up from one of my Substack guys contributed today. What we're looking at is the divergence between the MAG 7, the MAG's ETF, and the EFA. The EFA is the iShares, basically the global indexes of stock markets, excluding the US and Canada. And what we've seen here, it's a lower low, lower high. It's converging. Back here we had the sell off in mega cap 7 and those S&P 500 back in the April tariff headlines, rallied up here to new all-time highs to 7,000. But the S&P 500 is starting to get more diversified in its broadening of exposure because you have the mega cap techs now. I got in my notebook, Netflix is bearish, Apple's bearish, Microsoft is bearish, Meta is bearish, and Tesla is teetering on bearish territory. So it is a potential signaling that capital is leaving slowly. Like I say, those mega cap names. EFA is the index for the MSCI versus the Round Hill Mag 7 ETF. Down here, we're looking at the exposure in that Mag 7 that makes that up. Like I say, those big 7, 8 companies. And over here, the holdings in that global ETF. If you're interested in looking at that, put it on your charts. But really, the S&P 500 being at that almost round number 7,000, and those big cap names having all that capital, it is a product of the passive flows. The passive flows automatically move the machine higher, and no bigger winner in that game has been the BlackRock. BlackRock's total assets now $14 trillion under management, just unbelievable. And a lot of them is in those ETFs that replicate the S&P 500 and these mega cap indexes. No surprise, all the banks now out with earnings this week in the U.S., the mega cap banks particularly, and they continue to put up record earnings to get to borrow at cheap rates and from the Fed and get interest on their reserves, parking their money with the Fed. So Goldman Sachs, another record quarter off all-time highs in trading, continue to be the theme. But back to the passive flow machine. Look at this great chart here. Every dollar that goes into those S&P 500 indexes, 39 cents goes into those top 10 names, those mega cap 7 and 3 other names. So thinking about how every dollar that goes into the BlackRocks, the Vanguards of the world, how they then distribute that to buy those individual names. That's why we're seeing these record high fiat value. But when does it reverse? Back to how flows are trumping the fundamentals in short-term price action. Look no further than the Bitcoin ETFs. We have Bitcoin now breaking to bullish trend during the commodity bull run. 94, 95,000, potentially get a run here to 100,000. If we're going to get a run to 100,000, it's going to be on the back of flows into those ETFs. I bet particularly BlackRock's ETFs, massive inflows here the last couple of days. Look at the price chart on Bitcoin. Boom, replicated thereof. Just massive. I think the 2 highest days since those ETF launches. So it's been on the Bitcoin's run here to a bullish trend has been on the backdrop of those ETF flows, not so much the digital asset treasury companies, X Strategy, which continues to accumulate Bitcoin on the balance sheet, but those other Bitcoin companies that have pivoted from wanting to just stack Bitcoin to get higher market cap, they have not pushed the price up in this backdrop. They haven't been able to raise liquidity. So it's really been a product of strategy and those ETFs pushing it higher. Back to China for a second here. We had China macro data out this week. Massive rate of change increase in its imports and in exports continue to go higher. China gonna avoid a disinflationary pressure for Q1. Actually setting up to be a pretty solid quarter. Potentially, we took off our short of China. And chart here, China continues to sell stuff to the world, particularly the Western world, and get back US dollars. In terms of that, rotates that into real goods, commodities, gold, building out their infrastructure for the next 15, 20, 50 years. That's what China is continuing to do. And look at this great chart. Not a lot of people are macro talking about it, but it's going to be soon out in the headlines. Is the Chinese renminbi, the CNY against the US dollar continues to strengthen. Pretty big move. Weaker number here. It needs stronger Chinese currency relative to the US dollar over the last year. China's, like I say, it continues to bring in US dollars, continues to bring in assets that are going to be in a debasement world sought after, and that is why you could probably make the case that the Chinese currency continues to rally. Japan, on the other hand, the poster child of late-stage fiat death, continues to lose the gain. 158, 159, going to 160 at the Japanese yen. it's just an utter destruction of the fiat currency, which is coming to a Western world, Canada, Europe, UK, and eventually US over the next 5+ years. Look at this amazing chart of gold priced in Japanese yen terms over the last 5 years. This is what you call the death of fiat when you're looking at this chart. The Japanese 5-year government bond continues to spike up along with its 10-year bond, taking this late stage fiat experiment to the end inning. Japan is the poster child for it all. Hard commodities, hard assets, sound money is the escape route. That's what I got for you today. Hope you enjoyed that. Give me a comment down below of other content you would like to see. And thanks for watching.